Well, we begin with a story where Equity Bank has announced 14% growth in its third quarter net profit to 18 billion shillings. And as KTN's Joy Dorimbira reports, consolidation of the bank's subsidiaries is expected to drive growth even higher.
During the period under review, Equity Bank's loan book grew to 263 billion Kenya shillings from 203 billion Kenya shillings a year earlier. This saw interest income grow 21% to 31.60 billion shillings. The bank, however, expects growth in loans was to slow across the industry in the coming months due to rising interest rates that would force businesses to postpone new borrowing.
Growing after tax by 14%, and before tax also by 14% to reach 18 billion shillings.
The Central Bank of Kenya's move to raise the benchmark lending rate from 8.5% to 11.5% to keep inflation in check has seen banks respond by raising interest rates to customers. The 91-day Treasury bills rose to 22.492% last week, further heaping pressure on private sector borrowers. Equity Bank CEO James Mwangi, however, says this is a short-term spike expected to correct itself.
Interest rates is affecting about 4 million Kenyans who have loans, and yet the rest of the population will be affected if the interest rates are passed on to the consumer goods. When you look at the balance of payment, it is at just at negative 77 billion, and it goes up sometimes, like in January, it was at 113 billion negative, suggesting the underlying fundamentals are not long.
For Equity Bank, growth of its subsidiaries remains key to its strategic growth plans. During the period under review, profits from its regional banking subsidiaries and non-banking subsidiaries grew by 92%. The Kenyan unit contributed 86% of profits, down from 94% last year, with the bank keen on having the subsidiaries contribute 60% to the bottom line.
Also seen the contribution of the regional subsidiaries, that is Tanzania, Uganda, Rwanda, DRC, Congo and South Sudan, growing significantly. They have contributed 30% of all the deposits.
In the third quarter, customer deposits rose to 316 billion shillings, while its non-interest income rose by 29% to 16.8 billion Kenya shillings on the back of increased foreign exchange income.